April 30th, 2019, Tuesday, 13 market moves analysis daily. Guys, I'm going to have to talk super fast. We've got tons of stuff to cover. Let's roll. From April 29, top 3 observations. Signs of reversal in behavior in tech. We're going to cover specifically what we can learn from my disastrous analysis in Google and how we can actually apply it today to take advantage of the situation. Number 2, the word of caution. We're noticing some interesting behavior in the first few Chinese stocks that reported so far. And 3, we're going to apply the top characteristics that we have learned from the Google behavior, and we're going to apply it to a few trades today, specifically Shopify, Lilly, CHTR, and CMI. Guys, there is plenty of more, but the main concept is going to be described here in just a minute. First, let's see what exactly is happening. So, okay, Amazon reports earnings a few days ago. It misses on revenue. Yeah, it beats on earnings, it misses on revenue. What happens? Market forgives Amazon. This is how it looks on the chart. We're going to call it drop and pop. So here's Amazon reporting earnings, hits a low of $18.98, and what happens? It pops, it bounces. Okay, what happened to Netflix? Netflix misses on the numbers. The market, what does the market do to Netflix? It forgives it. This is how it looks on the chart. Netflix drop to 326 after the earnings announcement. Then over the course of the next couple of days, it pops. So drop and pop in Netflix. Now here's Google. I mean, I don't know why they're hating on Google. I don't know why they're discriminating on Google. Okay, but the bottom line, Google beats on earnings, misses on revenue, and market hates it. So being one of the last FANG stocks to report, could we actually use this as a sign in the shift of institutional behavior in the middle of the earnings season? So if we can identify this correctly, we can place multiple trades precisely, making a bunch of consecutive favorable trades. Now, let's take a closer look. What's going on? Well, guys, if you watch the video till the very end that I've posted on the Google, institutions are 90% bullish going into the earnings announcement on Google. I pulled up the option chain and shown you clearly that the calls that institutions were purchasing in the expectation of a Google breakout higher, they were outnumbering the puts like 9-1. And if you take, I've just selected a couple of more active strikes. For example, in this 1280 calls, institutions bought $5,507,000 worth of call options. Considering that Google is trading today at $11.93, $95 at the point I'm recording this video, they're going to take a $5 million loss. Now, that is just in the 1280 strike. Well, let's further take a look at it. There is a $6 million bet, over $6 million placed in the 1300 strike, close to $3 million in the 1310 strike, and you can do the math for all the other ones that traded less than 1,000 contracts. It ends up to some phenomenal numbers on the call side, guys. In relation to the put side, these numbers are staggering. So institutions unanimously favored Google moving higher. However, there's some serious amount of money that's going to be lost on these call options once the market opens. So what can we learn from this? Let's take a closer look. Number 1 is what Google is going to do next. Let's determine that. So far this morning, here's a snapshot of what's taking place with Google. We're noticing a typical move 3 behavior. So clearly it's going to open with a gap down, and compared to the drop and pop in Amazon, compared to the drop and pop in Netflix, what we're likely to have is drop and drop, as it often happens with move 3. So these bounces, guys, as you can see, it tried to bounce a couple of times. Initially it fell to like a level of 1250, 1260, tried to bounce here. You can barely see that. Then kept falling, small bounce, kept falling, slightly bigger bounce right back to the 1210 area, drop. So this is just a characteristic of a very bearish pattern. Call it a move 3, and it's also confirmed right here on the accumulation. So typically when we observe this, the probability of a drop and pop type scenario is greatly diminished. One of the reasons why is a lot of times when institutions come in and they buy the dips, you'll have a different chart, and specifically pre-market, you will see some volume coming in. And what we're seeing this morning is nobody coming in, and no institutional investors are trying to buy it. How can we verify that? Well, it's by looking at the volume. Actually, you can see it right here. So at 6:43 a.m., the volume in Google is only 13,862 shares. So in other words, there are no institutional investors that are in a rush to buy Google around the levels of 1192, 1195. Nobody is in a rush to do so. That is a bad indication going into the open, because if nobody wants to buy it at $100 less, then look, we're likely to head into a drop and drop-like scenario, which is exactly what we have been observing, right? So far, when we're trying to study these behavioral patterns during this earnings season, the predominant behavior has been in the stocks that actually drop after earnings. Typically, in many earnings seasons, we see if the stock drops after earnings, institutions will come in and they'll buy the dip. Well, the unique characteristic of this earnings season has been such that if the stock drops after earnings, it actually continues to drop the next day. So we don't expect the dip in Google to be bought here, not at these levels, at least observing the volume pre-market and the chart pattern on the 1-day, 1-minute chart. We're not really seeing any buying happening at these levels, which tells us that Google is likely to drop more before we see any buyers starting taking some bites and accumulating their positions. Here's how the Google chart looked. Let's evaluate what was wrong with the analysis. 90% of the things that I pointed out in the chart of Google yesterday, both daily and weekly chart, was actually bullish. The call buying volume was extremely bullish. The top information was rather bullish rather than bearish compared to the prior top. Guys, but what can we make out of this? No matter how bullish this setup was, the highest probability trade right now is to short the top no matter what. Now, I have made 3 specific observations or generalizations to help bring this trade to light. So here's what I've recorded, right? If the stock has run up 30% plus in the last 4 months, if this condition is met, then it is a part of the recipe for shorting the top this earnings season. So let's review it on Google, because later we're going to make this projection to some other trades that we're considering today. So what has happened? Since December, Google from under 1,000 goes to $1,300 roughly. That's a 30% increase in the share price. Checkpoint. Now, number 2, if stock faces long-term resistance level that coincides with the top. Okay, so here's long-term resistance of Google was just under $1,300, so it makes a run at it. It fails. So now we have 2 conditions met. It tries to take out the previous stop. Regardless of all the bullish behavior institutions, it fails to do so. That's condition number 2. Condition number 3, if buy volume is lower in relation to sell volume, if we compare it on the sell side when all the stocks were dropping in November, December. So let's go back to this chart. Let's see what we're seeing. Here's October, November, December. Do you see this large volume bars on the sell side? How do they compare to the buy side right here in the last few months? Well, clearly these exceed this buy volume by a great extent. So these are the 3 conditions that we want to observe in the chart in order for us to make a decision to short it this earnings season, despite of how bullish some of the other things could actually be. So let's take a look at some other interesting things that we have observed that are taking place with the first few Chinese stocks. So some large Chinese stocks have not been bullish at all, but here's a couple of little ones, right? This one, Sohu.com, goes from $15 all the way to $18.84 and shows no signs of giving in and selling off from here. So today it's going to be an interesting observation if it holds this level, if it moves higher, okay? This may be a very interesting observation that we can apply going into some future earnings of some of these Chinese stocks that will be reporting earnings over the course of the next few weeks here. Another one right here is CYOU. This one jumps from the same level, about 15 bucks, all the way to 20. Guys, that's a 25% pop, and it finishes close to the highs of the day. So what did this tell us? We're actually going to hold our horses on shorting Chinese stocks, and because a lot of them, they look very neutral going into the earnings, as you can see in these two examples I'm showing you right here, guys. But then these huge gaps up higher and increased volume on the buy side. Okay, we want to stay away from the Chinese sector right now. Now, clearly, BABA still shows signs of weakness, but some of these cheaper names in the $10, $20 range, they're making pretty significant gains. And what we want to see is maybe a few more Chinese stocks report until we can make a conclusion on how to trade the Chinese sector. So for now, we're putting the Chinese put options on pause. And today, guys, huge day. We're not going to be able to review every trade we're considering, but I've got a few. Clearly, some of them already reporting earnings either this morning or yesterday, last night. So we're considering CHDR 380 puts. So pre-market, CHDR is actually trading at a level of 372 so far. The reaction, even though it missed on some of the numbers, it actually missed on earnings, slightly beat on the sales number or the revenue number. The stock is up. So how are we going to trade it? We're going to take a look at the chart. One condition is met. The chart of CHDR shows us the price is up more than 30%. Look at this. It goes from 270 in December all the way to 370s. Okay, so one of the conditions that we've underlined utilizing the Google chart going into the earnings was it appreciated 30%. This condition is met here. The other condition is that it's running against some significant levels of resistance after making this 30% move higher. So here's your top 1, 2, 3. Second condition is met. Third condition, look at this huge volume right here in relation to the buy volume. Third condition is met. What are we looking at? Targeting a level of 350, 355. As I keep mentioning in every video, we want to short stocks on the bounces, not the lows of the day. So CHDR weekly chart confirms this huge resistance level at about 380. It confirms the higher sell volume in relation to the buy volume. So all three conditions are met. Therefore, as it moves, hopefully higher pre-market when we go into the market open, if it goes in about 380, we're buying 380 puts on this name. Considering Shopify 230, 220 puts, I will warn you guys, this is a hugely controversial trade. The sentiment, as we have seen with Google as well, is very, very bullish in Shopify. The initial reaction was pop and drop. Now, Shopify has a tendency to make some crazy moves. And just for the reference, last time it reported earnings, it sold off from 170 all the way to the 150s and bounced over the course of the next few days all the way above the 180 level. So I'm not sure exactly where Shopify is going to go once the market opens at 9:30 in the morning. But the bottom line is, I think it has a high probability of maybe revisiting this level of 231. If it does revisit this 230, 231 level, that would be an area to come in and buy the 230, 220 puts, because if we project what we're observing with Google, this thing could easily tank to a level of 205, 206. This is how we look. This is how it looks on the chart. We got a double top, so it is not a longer term resistance level, but the stock is at the all-time highs. We do have a condition here where it was selling off recently a much higher volume in relation to this volume higher when it tried to move from 190 all the way to this level of 225, 230. So we do have a lot of these conditions are met, and certainly the condition where the stock goes 30% in the last 4 months, this one actually doubled This stock literally doubled from December lows of about 120, 130, pretty much at 230 right now. So it appears that all three conditions are met. We want to short this thing on a bounce. This is how it looks on the weekly chart. All the confirmations are here. Volume subsiding in relation to the recent sell-off volume. Bearish reversal candles right here signifying the double top. Huge appreciation in the price of the stock. If we're applying the Google behavior, this looks like a very good setup where it could easily revisit the levels between 205 and 210. Considering LLY 118, 120 puts. Now this one, it's got some characteristics I'm going to show you in just a second that I'm not 100% crazy about. But, so far the reaction in LLY is it's dropping after the earnings announcement. If we take a look at a closer chart, yes, there is a lot of bearish things. The stock's been struggling at these levels between 128 and 132 to break out higher. Lots of bearish momentum going on there. Look at this huge sell-off volume. And on the days where it looks the volume, the institutional investors actually getting rid of the stock. There's one issue here, however, right, is the support level of about 114, 115 is near. And so depending where LLY will open at 9:30, I'm not sure if there's going to be more room left for a trade unless it's going to break this 114 level and finish at the next level, which we believe could be 108, 109. But the huge depreciation in the stock is not confirmed on this one. It did go from a level about 105 to 130, so you can consider it a 26% gain roughly before it runs into this solid resistance level of about 130. Since then, it does sell off. Look on this chart how easily we can see by how much the sell-off volume exceeds the buying volume. It's pretty crazy. Multiple divergences on the chart right here too. As the stock price goes from this level 105 to 130, the strength of the stock continuously fall. So could we visit these levels 108, 109? Probably not today, but over the course of the next 7 days, it's very likely as this volume hits its high level on this chart. At the same time, we have accumulation distribution confirming that this indeed is where investors were pulling their money out. Bearish MACD, just lots of bearish stuff. This chart looks quite a bit different from that of Google, but by itself, this trade does make sense. Again, the only concern is where is it going to open at 9:30? Is going to be enough room left for a trade there? And here's another concern so far. It's dropping on very low volume. So at about 6:45, this was taken 2,551 shares of volume in this thing. So it is dropping on low volume, which by itself is not a very bearish indication. So be very careful if you are looking to trade this one. I would definitely wait for some kind of bounce before buying any puts on this one here. Considering CMI 170 puts on the bounce. Now so far the stock reported earnings. They're no here, no there. Nothing really going on. CMI is tied to selling a lot of engines for the trucking industry in China, but the stock has run up substantially. So far, again, we're not having any sort of reaction. It's just sitting there. The reason I wanted to bring this one to your attention, guys, is because if it's going to open pretty much where it closed yesterday, the options are going to take a serious hit on either side, both sides actually, the call side and the put side, and you can buy this one very, very inexpensively. So if some of you working with a small account, you're looking to get some traction, but you don't have a ton of funds to be buying like Amazon calls or puts, this one you should be able to pick up at the market open very inexpensively. And generally, CMI is capable of some pretty significant move, like a 10% move, 8% move in earnings. Pretty normal for this thing. So like a $10 drop is something that this thing can easily accomplish at some point throughout the day. Now, again, the strategy is not to buy it when it's dropping, not to buy puts when it's dropping. The strategy is to buy puts when it's moving higher. This stock historically does have a very high probability of a reversal. So if it does pop on lower volume when we're going into market open at 9:30, this would be a good one to play the reversal, especially your options are going to be very inexpensively, and it is capable of some big moves. As you can see on the weekly chart, look how huge these moves are. And typically, just like Shopify, these two share the same characteristics. Once this thing pick a direction, they have a tendency to move in that direction for multiple consecutive days. So this is a good trade for maybe some of you guys that are not working with a day trade account like 25K, because once the reversal takes place, it's going to stay with that direction for multiple days, as you can see from this chart. Once it's moving higher, it's moving higher. Once it starts dropping, it's starting to drop. And you see how precise this reversal points, right? Here's your bearish reversal candle, then it drops 3 days. Here's your bearish reversal candle, it drops for a few days. Every time you see this bearish reversal candles, it's dropping in the same direction, which is exactly what you need to profit greatly on trading weekly options. You want that thing to just go in the same direction consistently over the course of 2 or 3 days. And we're noticing the reversal candle here. So if it goes against that 170 level, that would be a good entry, considering a target price about 155, 156. Guys, market move, the highly expected move 11 does take place yesterday on April 29th. This is how it looks on the chart. Anytime you think of a move 11, think of a pyramid. And another characteristic of a move 11, irrespective, because there's 3 versions of move 11. If you study the course, you will know specifically what the difference is. The move 11 can initiate with the market slightly going lower. It can initiate with the market slightly opening higher. But the main characteristic of all the 11s, it's going to resemble a pyramid, and it's going to close pretty much within a couple of points at the same level where it started the day. So here's the reference point at 9:30 in the morning. This is where the move initiated. This is where the move ends at 4 p.m. As you can see, where it starts and where it ends is pretty much in the same spot. But this is a topping move, confirming that the topping behavior is here. And it's interesting that the bulls and bears are still fighting like crazy. The 2-day sequence, we can clearly see that move 4 and 11. 4 is a bullish reversal move. 11 is a bearish reversal move. And so this is how it looks. So it looks like here's your bulls, here's your bears. Okay, the fight is on. The 5-day sequence, however, gives us some insight that this stop is very much forming drastically at a high speed, even though the markets appear like they're not moving. But the stopping formation each day, we're facing another 6 or 11. We're getting so much closer to an unwind and a much bigger drop in the market. So 1, 6, 12, 4, 11. We're noticing when we have some of these moves, 6 and 11, when they come in right after another consistently. For example, today, if we get another 6 or 11, that would be extremely significant, because if that takes place, we should be committing much larger capital to strike against the market. So we're waiting for the right sequence, but we're definitely seeing some signs that the top continues to form very rapidly here. The signs of this intraday selling behavior continues to overwhelm the market over the course of the 5 days. You can see it on this 5-day chart. We're noticing that this behavior of increased sell volume intraday is really the prevailing behavior. So especially as we move to the slightly higher levels, 29.40, 29.50, look at how pronounced these red lines, red bars are on the sell side, and how much the volume is actually spiking when we're seeing these sell-offs intraday. So the top formation continues. The VIX confirms that we're getting closer and closer to the top. It is still under 16, but the uptrend does resume in relation to yesterday, where VIX was taking a pause. VIX closes, as a matter of fact, yesterday on the 29th, it closes at all-time high of the day. So it started at 1301, dropped to 1266 was the low in the VIX, and finished at 1308. We have not seen VIX do this. Typically, it starts high and finishes at the lows of the day. So I think this is a characteristic of a behavioral shift. So if we put the 2 and 2 together, the shift in the behavior of institutions that we're observing, their reaction to the Google report and earnings, and we put the VIX together and we put the 6 and the 11 behavior together, all of a sudden we got a recipe for a market drop. We're looking for a market move 6, 11, or 12. The reason I still have 12 here, we may be opening, let's say, a couple of points lower. We could sell off, but be careful because the bulls are still present and they're trying to maintain these levels. They're trying to fight for it. And so we're not expecting the bulls to surrender all of a sudden, but I think we're getting closer and closer to that point. So high probability of 6, 11, or potentially 12. Key takeaways, shorting the top strategy is the highest probability now, irrespective of how bullish institutional investors are in some names. Google was a good example. Short the bounces that happen on low volume. Pay very specific attention to when stocks go higher. Are they going higher in lower volume or higher volume? Start observing the stocks that you're considering trading that day pre-market. Measure their volume at 6, 7, 8, 9 a.m. and see if the volume is increasing or decreasing. And study the prior day's volume to understand whether this volume today indeed is lower or greater than the general average volume of that stock you're looking to trade over the course of the last 10 days. Now, interesting fact, Amazon fails to maintain that 1950 level yesterday. At the same time, you know, the magic number we're watching yesterday was this, 2946.75 on the S&P futures. So at the same time, Amazon fails to maintain that 1950 level. So does the S&P futures. They fail to maintain this level of 2946.75. So that tells us that the probability of a bearish reversal is increasing. Further bearish moves to develop. Guys, trade fearlessly. We are about to conquer this market. Let's rock. I'll catch you guys in the next video tomorrow.